Hi guys, how are you doing? This is Do from the Sovereign Trader channel. I'm a financial market swing trader based on classical chart patterns. I have around 2.5 years in total of trading experience where I experienced with several trading styles, strategies and methods. In this channel I will provide my views on the markets along with trading education and personal positions. Moreover, I'll share with you guys my journey to becoming a consistently profitable multimillionaire and sovereign trader. During the last weeks, guys, I've been quite busy setting up and packing for a new apartment. I wanted to be able to provide you with another video for this week, so it will be a short one where I'll go through my open positions, closed positions, and candidates for today. Let's say possible instruments to enter positions today, and I'll do a very quick review on the rest of the candidates, the ones that are marked in blue, and see if we have anything interesting that might also be added to the current day candidates, let's say. So I'm starting off, guys. TLT. If any of you saw the previous videos, I was considering closing the position at this point, 75% of it actually. Price did not reach this point and it actually gapped strongly up and closed pretty strongly with a bull bar. Yesterday was an okay day because there was bad follow through to the bull bar. I would not want price to continue above this minor swing high, so we went down, minor swing high went lower. I am trying to let my winners run, and this is part of it, but I will not let price continue higher. I will not let price close above the 18-day moving average, and certainly won't let it to reach the stop loss. I mean, if it will reach the stop loss within the trading day, so be it. But I won't allow it if it will close between the 18-day moving average and the stop loss. I'll probably close the position. I'm moving on to NEE. So price moving down not so strongly, honestly. The last day was a good day, bearish engulfing. I would expect price to continue down. If it will continue down, I will probably progress my stop loss to the entry point. Moving on to CXW. I will probably close this position, guys, at the market opening. Unfortunate because it's the second entry on this stock, and I'll tell you why I will close the position. Because price have been in some kind of volatility contraction, which usually leads to volatility expansion. Volatility contraction comes in forms of triangles, flags, and price patterns. It can be also an ascending triangle, like here. Volatility have contracted into the apex of the ascending triangle. So I will probably close the position because price tried to break out, did not manage to. Tried to break out again, another higher wick. Very neutral to weak bar, tried to break out again, did not manage to. Tried to break out again, did not manage to. And this is clear signals for me that there is probably strong selling at this point and price is getting rejected. And if you are taking into consideration this bar too, it adds to the weakness of the price action, and it is also actually the first indication for us that price wouldn't break higher. So I entered my first position on this bar and closed it on this bar, and then entered the second on this bar and will probably close it on this bar. So yep, price action is a bit confusing here, and I am moving on. QCOM. So yesterday was beautiful bar, bearish engulfing, coming to test the breakout line, and actually this low to the left, these lows to the left. Okay, I would expect price to continue down, and once it will, I will probably adjust my stop loss to the high of this bearish engulfing, and even to the break-even point. Depends on the strength of the price action and continuation to the downside. And moving on, DE, decent head and shoulders failure pattern. Entered on this bar after price closed below the ATR entry, 2-bar reversal. I did not exit the position because I wanted to see if price manages to close back within the pattern or even pierce back into the pattern. It did not manage to. Yesterday was an okay day. There was a bad follow through to the bull bar. Price closed at the lower half of the bull bar, and I would expect price to continue to the downside. C. So we have an ascending triangle, thrust break. The last 2 days, the markets on Thursday and Wednesday, the markets have been moving up. Markets, I mean ES and NQ, call it S&P 500 and Nasdaq, and C did not do so. Okay, we can look at DE. On Wednesday there was a big bull bar. We can look at QCOM, we had a bull bar too. TLT, we had a decent bull bar on Wednesday. C did not print a strong bull bars, which means and shows relative weakness for Citigroup, and that's amazing for us. Once the markets will continue down, we believe that Citigroup will continue down too. MO have been closed. I think that I should have kept the stop loss a bit higher, provided at least the chance for retest at the breakout line. Either way, have been closed. GDX, I did not expect. Actually, I wanted to say that I did not expect a retest to the breakout line, but when I'm looking at price action now, it's actually fine. I mean, we are after quite a long leg down, and it's quite okay that price will come to retest the breakout line. I think that also too I should have kept the stop loss a bit more above the breakout line. AIZ, okay. According to strategy, I mean, price have been moving sideways for quite a long time, as I tightened my stop loss as much as I could while providing enough room for price to break. I was looking at price action from this point of view and was thinking that maybe price will break to the upside. Did not. Broke below 200. Broke below 18-day moving average, and it's rejected by it. So that's fine. CW, I entered this position quite a while ago, but continuing to monitor it. Not so relevant for today. Disney, it's my main candidate for today. I will probably initiate a short position at the opening of the market. That's because Disney, we have around, I think it was 50 or something weeks of, 53 weeks of a descending triangle. We are at a massive demand, multi-year demand zone. Okay, if price will manage to break below it, I think that we have quite a decent room to move to the downside. Let's see the monthly for a moment too. I says, wow, the first significant support that I can see it will be the 44-45 area. Yep. So yeah, that's about that. IGF, also a position that I've been in have been closed. Unfortunately, I was very unlucky here. So price came few cents above my stop loss, took me out and continued down. I might have, again guys, it is important to say that I'm trying to construct proper stop loss adjustment rules, and it's something in process. So I think that in such a scenario, having a clear rule where I should put the stop loss, so a rule that I should provide price with a chance to retest the breakout line and then adjust the stop loss, could be beneficial to such position. But I set again the ATR entry, and if price will break below it and below these lows, I might consider a re-entry to the position. Decent ascending triangle have been tested 1, 2, 3, 4, you can say 5, around 4 to 5 times, which is important. Close below this ATR entry and I will take the position short XLP. So actually I was aiming for Head and Shoulders failure, but I was seeing a double top forming here. So yeah, it could be a good place to a bit front run the Head and Shoulders, and it's quite good. We have a hybrid pattern. We have a mega pattern, a big pattern, Head and Shoulders failure, and we have a smaller pattern that will launch the bigger pattern. Yeah, so the ones marked in orange are the candidates for today. Okay, as you can see, also price action suggests that we might get an entry alert for today. The rest are candidates for the coming week. I'm going through them quickly to see if any of them deserves some kind of the deeper description. McDonald's, double top, nothing too much. PepsiCo, nothing too much either. I would want price to break below this level, below the pattern, and below the lower boundary of the channel, ascending channel. Gold, GOLD, Barrick Gold, nothing much here. Nothing much here either. Not here. FCX, nope. Looks good actually. MGM looks good. I need a firm close below the 200 AMA, below the right shoulder of the Head and Shoulder failure. We are coming from all-time highs. I would actually also want to see some kind of a pullback, preferably before the breakout, to feel even more comfortable with entry. Because after such a strong move down, there'll probably come a pullback, and I wouldn't want this pullback to come after the breakout and maybe shake me out of the position. This is why. FE is okay. We have some kind of rectangle to Head and Shoulders here. We need close below. Down slanted Head and Shoulders pattern, nothing much to add here. ROIC looks okay. GLD. Honestly, guys, I want to be a bit. I would say cautious with gold stuff, with gold ETFs. Yep, because gold is seemingly getting supported by the 200 AMA and probably taking all the related instruments to the upside. VSX, nope. SVC, nope. Nike. So I could have entered the position here. I didn't feel comfortable because we were closing it as a bull bar, but on this bar yesterday actually I couldn't enter position size there because it was my moving day to the new apartment, so I was busy to the head. But I'm feeling that at this point it's kind of chasing the entry, and I don't feel comfortable with it. I'll need to see how price closes today, and maybe it will provide a better indication. XOM, no, far from entry point. So this is for today, guys. This is for the weekend. This is it for the weekend update. It was a short one. Next week I won't be here at the beginning of the week, so I will probably release a video only for the weekend update for next week. And that's it. I hope you got some value from this video, and I wish you all a good weekend, and I hope you had a good trading week. And that's it. I hope to see you here again. Bye bye.